Hey traders, TG Watkins here. And a couple things that I've been seeing. There's been hot debate about if we are in a new bull market or if this is just a bear market bounce. And so a couple things I just wanted to show you on the higher time frames to kind of help guide us about some of this stuff is, yes, typically when price gets up to the monthly 10, that is going to be resistance and we should expect price to go lower. And that is if a continuation of the bear market happens. So if you want to see a couple examples of that, we can go over here to 2000 and 2008, and you can see the bear market was in fact where price continued to get rejected by the underside of the monthly 10, certainly, which is it's the blue line. Now, however, let's maximize this and let's do a teleportation back to about the 60s to the 80s. And we have the 70s in between here. And there was a lot of inflation and Paul Volcker and interest rates and all that kind of crazy stuff going on there. And I've been hearing about, reading some stuff about the bullwhip effect. And typically that is a concept that's about the supply chain. But I think we could take the same idea and same concept about suppliers and retailers and manufacturers chasing each other. And I think we could apply also to the Fed chasing inflation with its interest rates. So what you'll notice is that, just again, ignore what dates these are. These are really just chart patterns. But what you'll see is we had a pullback here on the monthly SPX. And you can see, yes, we had a pullback. And what did it do? It did get back to the monthly 10. Now, in this case, the monthly 10 was not resistance and price continued to move up from there. But then later, kind of whatever, it rolled over again, and you can see it got rejected by the underside of the monthly 10, and it got rejected again by the underside of the monthly 10, and it was a deeper pullback. You know, this first one, I think it was something around 20%, yep, and then this one was something around 35%, yep, so you can see that. And then when price was able to get back over the monthly 10, boom, now you're back into a bull market. And then what we could see again is price got underneath the monthly 10, got rejected, and then where it was over was when price was able to get past it. So there you go. And then you can see here, got under the monthly 10, and then it was finally able to break it. So on a much larger time frame, on the monthly time frame, this is what we're looking for that will help tell us if we are in a bullish or bearish market. So here we are currently right at the S&P monthly 10, and we're just going to have to be along for the ride, watch and wait and see if price is going to get rejected by the monthly 10 and we're going to keep going down, or we're going to actually break through the monthly 10 and we get into a new bull market. The thing I will kind of point out here, if I can draw a decently straight line, is this was a bit of a, call it a megaphone type thing, but you can also see it was a bit of a bullwhip effect. We had a little correction, bull market, bigger correction, bull market, and then we got a really big correction. And this, back in the 70s, inflation, chasing inflation, what if we end up kind of doing the same situation in the market currently to where, we've started with a 22, 23% correction. What if we get a bull market? And then inflation rears its ugly head again, and then the Fed tightens and we get a bear market. And then they get inflation kind of under control, so we're happy about that. And then inflation comes back again. And then we have to go down and tighten again. And then we finally fix inflation for good. And now we're back up. So just some very interesting concepts, like 30,000 foot view about what's going on and seeing what we can do about this. And gosh, it's going to be very interesting to see where we are with this whole narrative of inflation and everything else that's going on in the world. All right, everyone. Thanks again. Take care. Catch you at the next one. Hey, TG here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to leave a like or comment below. Also, make sure to subscribe and click that notification bell so you can stay up to date with my market analysis. Or you can join my free newsletter with the link in the description. Good trading, and I'll see you at the next video.